Hi, this is Zak Mir with the Bulletin Board Heroes here at Zaks Traders Cafe for Tuesday, the 29th of August. And after a couple of failures to get back above 7,400, the markets managed to do that today, helped by China and the stamp duty reduction, which obviously we are not able to do here because we don't like the market as much, perhaps. But above 7,400, the target obviously up to the 50-day moving average, 74.80, and then ideally up to the top of that falling February trend channel at 76.70. But the key here, I think, is holding above 7,400 on an end-of-day close basis. RSI just nudged through the neutral 50 level, which the RSI actually was the signal in the sense that we had a bear trap, narrow bear trap for the FTSE below July support earlier this month, a week or two ago. That bullish divergence has been the buy signal along with the bear trap effect. So all good on the charting there. Only back below 7,300, recent intraday support really questioning the idea that we could head up towards 76.60, etc. Onto the DAX, which one would presume has also had a boost from China's stamp duty moves. Not as much as the FTSE. We need to get that end of day close back above the 50-day moving average, 15,900. If we can do that, then hopefully there'd be a retest of 16,500 and the year highs. The worst case at the moment, hopefully no lower than the 200-day line, 15,400, and ideally we bounce off that December uptrend line. RSI 51, so again going into the bullish territory, and that should hopefully give us that end of day close above the 50-day line either today or tomorrow. Onto the Dow, which was a good mover yesterday, but also have got this has this 50-day line 34,600 or 700 to get through. End of day close back above that, then hopefully we'd be back at the highs by the end of next month, although obviously September not known for being one of the greatest in the stock market calendar. So let's see if we can get through that 50-day line at least first. The uptrend line there from back in October holding there at 34,100, and we want to see the market stay above that. On to Bitcoin, which has had, I wouldn't say the August from hell, but something not that far off that particular scenario. Moving along to Bitcoin, which has not exactly had the best August or best month in the last month or so since the end of July, peaking out at 30,000 and then coming back to 26,000 or so. What's interesting here is that we've had a rally attempt, but the RSI is still below the oversold 30 area, so that does give us the warning that we are in a mid-move consolidation ahead of a new leg to the downside. May have to factor in 23,300 at the floor of that broadening triangle, the red triangle that I've drawn from March, but ideally, if we are saved, we would be saved by that uptrend line there from January, 25,700. At this stage, the earliest trigger on the upside would be a break of recent resistance, the resistance of the 23rd, which was up there at 26,700. So you need to see an end of day close back above that. Initial upside here would be the 50-day moving average at 28,700, especially with that rising 200-day line, which is probably the main positive factor at the moment. Onto the stocks and spoilt for choice at the start of this shortened week. First off is Allergy Therapeutics, where you've got to be looking at it very closely, but looks like we've broken a line of resistance there from the beginning of the month. That was at 2.5 pence. Above that, we're looking for the shares to head as high as 5.75 pence by the end of next month. Not quite sure what would do that, but that's the charting setup, and we're looking for recovery while we're above the 50-day line around the 2 pence level. On to Amala, which was formerly known as Dish. And here we've got the situation where good sideways consolidation above a now rising 50-day moving average. That suggests that we could hit the top of the rising trend channel there from April up to 0.25 pence as soon as the end of next month, while we hold obviously above that 50-day line there, now rising through 0.1 pence. Moving along to Checkit, and here we've got a trend line break. We had it actually a couple of weeks ago, breaking above the 50-day line and that March resistance line. What's exciting here is that we now have both the 50 and 200-day lines rising, so that suggests we're going to a golden cross. That 200-day line, the black line there, rising very sharply, so that does imply that better days are to come, and we could head up to 39 pence by the end of next month, while we hold above the floor of the channel at 21 pence. Destiny Pharma has been a solid spot over the last couple of months. Looks like we bounced off the floor of that rising trend channel from March, that level around 43 pence, and above 43 looking for as high as 62 pence by the end of next month. If you're cautious, you might wait for a break of the resistance line from earlier in the month, so around the 50 pence level, maybe give it another penny higher, and then that would hopefully signal we're on our way towards 62 or 63 pence. Both the 50 and 200-day lines now rising. We're probably a week or two away from a golden cross, and that the run-up to a golden cross tends to be the strongest part of the cycle. Remember, the rally started with a bear trap gap reversal and another unfilled gap to the upside, so that's pretty strong stuff. Moving along to a stock which I covered first apparently on the 29th of June, where the shares were in the low 40s. They're now in the upper 50s on De La Rue, and we're in this rising trend channel from back in March, top of the channel heading for 85 pence, which I suppose would be an end of October target. If you're cautious, maybe you want to see the shares above the 200-day moving average, now at 58 pence on an end of day or end of week close basis. We had a gap close buy signal last month as well, so things are looking much better here, and only back below really 50 pence, endangering the recovery argument at De La Rue. Next stock is one which also looks as though it is getting its act together. Genflow. Here we've got a rising trend channel base, or we hope we have, and 2.25 pence the base there, and the 50-day line above the 50-day line, and that base looking for as high as 4.5 pence by the end of October. Obviously, it could be a bit sooner than that if we're going to move like we had back in April, but we're going for that at the moment. Great Southern, a great chart as well, and here we're pushing along after the unfilled gap to the upside on Friday. Broke the high of the gap up day at 3.25, and above 3.25 we're looking for the top of that broadening triangle from back in June last year as high as 5 pence by the end of next month. We already had a golden cross earlier this month, so the stock really has it going on at the moment. Hellenic is the next stock, and here nice bounce today. The sideways shuffle that we've seen in Amala is here in Hellenic as well. So we're a rising 50-day line, support above the rising 50-day line on dips, and that means we're looking for a minimum here at 0.15 over the next week or two. Maybe we could get up to the top of that rising trend channel from back in May by the end of next month. So feeling pretty chipper about the prospects for Hellenic at the moment, while we remain above 0.08 and the 50-day line. Next up is Novacyt, and here we've gapped up, so that's the reason for the inclusion. So that's I think the third gap to the upside that we've had in the recent past. Looks like it's a strong situation. Initial target here 87 pence at that February resistance line, and then potentially up to £1.15 by the end of next month, while we hold above 70 pence, or if you're even more fussy, while we hold above the floor of the gap at 74 pence. Obicare is next, and here we've got the shares pushing through on a V-shaped bull flag. We had a gap close buy signal to start the recent part of this rally. The view at the moment is above the 11 pence, well, probably the 12 pence area now, the recent resistance, looking for 20 pence by the end of next month. On to Polarium, where I was sniffing last week that there could be a recovery here, and it looks like it's happening with the gap higher we've seen today, not quite breaking that line, or just about breaking that line, that June resistance line. Bullish divergence as well, and the shares up to 24 pence at the top of that broadening triangle if by the end of next month, while we hold above support on, or rather resistance on the way down around the 15 pence level. On to another stock where people successfully guessed that an RNS was coming up. We got Pantheon. Shares looking rather strong at the end of last week, and we had a good announcement today confirming the resources under the ground. Unfilled gap to the upside. We already had that solid consolidation back at the end of last week, so the view at the moment is above 13 pence neckline resistance. We're looking for as high as 22 or 23 pence by the end of next month. Not quite sure what would drive that even after today's news, but 13 pence level to hold, and hopefully then we can get into the low 20s after that. On to Panthera, which is built on last week's strength with another move higher today. Here we've hit that 9.5 pence price channel top from back in March. Above 9.5 we're looking for is up to 13 pence by the end of next month. Ideally we stay above 8 pence, which was late July resistance in the meantime. Moving along to Premier, which is included today not just because a lot of people follow the stock, but also because the shares have actually gapped up after a bear trap. So it's a little bear trap gap reversal, which is amazing really given the recent history of the company. But the view still now that above Friday's support, 0.36 or 0.36 there, we're looking for the shares to head to the top of the range as high as 0.67 by the end of next month. If you're cautious, you'll probably wait for an end of day close through the 50-day line. Currently at 0.549, but looks as though with that bear trap reversal, we've done enough to show that the shares can head higher. On to Plexus, which hit our original target there around 6 pence. Now looking for as high as 10 pence, which is a February resistance line projection from the beginning of last year. Hopefully we'll see that over the next 2 to 4 weeks. Upside value while we hold above recent resistance around 6 3/4, above 6 3/4. Looking for 10 pence and only back below 6, really implying a problem. Quadrise is the second last stock, and here bear trap situation from below the June support there at a penny. Above a penny we're looking for around 1.4 pence, which is the top of that triangle from July and also the 50-day moving average area. Ideally we see that by the end of next month. Finishing off with Seed, which the cognoscenti seem to be quite keen on. And I think with this V-shaped bull flag above the 200-day moving average, they may be right. That 200-day line at 2.1 pence, above that looking for as high as 3.1 pence by the end of next month. And good to see the shares consolidating above the 200-day line on the second attempt after last month's attempt to get through and hold above the 200-day line. That's it from me today. More updates tomorrow.